Hello and welcome to Charting the Markets with me, Sean Murison, Senior Market Analyst at IG South Africa. The markets are trying to find some footing this morning after ADP data came out slightly better than expected, and oil prices came down yesterday, suggesting maybe less inflationary concerns and maybe less hawkish monetary policy. But whether those moves are sustained, we'll see into Friday as we have that all-important non-farm jobs data coming out of the US. On today's economic calendar, we do have a precursor to that, which is the weekly unemployment claims out early afternoon. Let's look at some charts, and starting off with the US dollar index or US dollar basket. Now that longer-term trend is reaffirmed as up. We see that that strength in the dollar has been quite aggressive. We do, however, have this bit of this evening star or bearish engulfing type bearish candle pattern from overbought territory. So that is a minor suggestion that maybe we could have a bit of a pullback from overbought territory. For me, it's certainly not a signal to trade against that trend, but hopefully an opportunity if that market does come down. Looking for that price to correct a little bit, looking for a bullish reversal, to look for long entry closer to one of our levels of support. The initial support coming in at 105.70. So we're waiting to see if this pullback does manifest and where it does take us to. And if we could get something like that, we have longer term targets, a retest of that high at 107.00. We get through that, we're looking at our next level of resistance there, targeting about 107.50. That's for the US dollar index, the US dollar basket, as it's labeled on the IG platform. Looking at the euro dollar, and obviously the euro is quite heavily weighted in that dollar basket, so that chart is similar, but it's obviously inverted. At the moment now, we do have seen, a trend, a short to medium term trend at least of euro weakness, dollar strength, and that's noted by this channel that we see on our chart now. As we start to fall, we have been laboring in oversold territory. But when we see an indicator like that laboring in oversold territory, it is a suggestion that that trend is firmly down in this particular case. And so it's not really a reliable signal, in my opinion, to trade against that prevailing trend, which is down. A longer term trend, we can argue maybe still sideways, but certainly in the short to medium term trend is down. We do have this bullish engulfing candle pattern, though, and it does suggest that maybe we have a little bit of a rebound from oversold territory. For me, preference is to wait out any strength in that euro if it does manifest, and looking forward to see where it takes us, and looking for a bearish reversal before that 1.0575 level, before targeting further a move back to lows with the initial target sitting at 1.0445. Now, if we do have a rebound that does gain some traction, we could start and manage to break above this level and above this lower, this upper channel line. Then we might start considering long entries again, with a view that the longer term trend is sideways and we can trade between the levels. So bulls will want to see that price moving back above channel resistance and that horizontal level at 105.75. So that's provided that that rebound doesn't fade, it has to get some momentum and manage to crack through those levels. But at this stage, preference is looking for a bearish reversal before resistance, before channel resistance, or this 1.0575 mark, to look for short entry and targeting a retest of that 1.0445 mark. Now, cable, similar picture here, except what we've just labeled here is these trend lines that have become steepening. So it's showing you that that trend is starting to accelerate to the downside. So that's pound weakness relative to dollar strength. At the moment, we're finding resistance on that 1.2160 level. And if we do get a breakout there, we still wouldn't be looking at getting a long on cable just yet. Same approach with that euro as with that euro dollar. We're looking for some type of bearish reversal to say that this rebound from oversold territory is petering out, and then we'll be looking for short entry. So depending on where we do see a reversal, if a bearish reversal, could be from current. So if today's candle was to close a little bit lower, below the halfway mark of that preceding candle, then we'd target initially that low at 1.2036. And if we get through that, then 1.1915. In the event that we have this upside breakout, so this rebound gains some traction, we'd be looking for a bearish reversal close to that 1.23 mark for short entry. In that situation, we initially have the same longer term downside targets, but initially then 1.2160 would become a downside target. So we're waiting to see what happens. You can see it's a small bodied candle right now, so it's not really much catalyzing a directional movement right now. And there's not too much in the way of news today to drive that. Let's move on to some equity markets now, and starting off with the US Tech, or the NASDAQ 100. Now, has been an outperforming index this year. A lot of hype around AI and cloud computing, obviously helping drive that technology, predominantly technology or non-financial index. And what we see is that longer term trend is still considered up. We do have that price still trading firmly above that 200-day simple moving average. Over the short to medium term, though, there's a bit of a sideways range-bound price environment. We have found some support at this 14,565 level. We do have a bit of a bullish reversal and from oversold territory here. So slightly bullish signals there. But you could argue that this is even a shorter term consolidation. I think if you're looking for some momentum to the upside, maybe you're having a little trend line here at the top. Just putting it along the tops here. Sitting at about 14,890. Maybe just looking for a close above that level before targeting further gains. Certainly not looking at shorting the index right now in lieu of that longer term uptrend. So for me, looking for that confirmation above that 14,890 odd level, in which case, if we get a close above there, start targeting move towards 15,250. In that event, I might consider having a stop loss in the midpoint of this range between 14,565 and that 14,890 level. The US 500, or the S&P 500 as it's labeled there, now that has started to test that longer term uptrend. We see the price has started to trade below this longer term trend line and below that 200-day simple moving average. Now, when we look at trends and that just across below that 200-day moving average, for me is not enough to say that that longer term trend is now down. but it is certainly breaking at this point in time. I'd give it a little bit of leeway at this point in time. If we did see a sharp rebound, I'd be happy to sort of stick to the long side, not too overly eager to short from current levels. But if that trend is sideways, we're trading between the levels. So see what happens today. Bullish confirmation, a strong close back above trend line resistance would call for move back to about 4,325, and above that 4,460. I think you could use that reversal low. Now, if we don't get a positive close above levels here, when you see some renewed downside, next level of support is 4,175, and we'd look for a bullish reversal of that level for long entry again. I think the first place that I'd start looking for maybe short entry on that is if we do see the price starting to trade below that level and start to close below that level at this point in time. But S&P looking less healthy, certainly than the NASDAQ 100 at this point in time. Charts are similar, and obviously there are dual listed stocks between the two indices. But we've had a difficult phase at this point in time where we have broken that longer term trend line and that 200-day simple moving average. But we are quite close to support. So maybe a bit tricky to chase that market lower unless we see some daylight evolving between the price and that 200-day simple moving average, and that would be considered on the close below that 4,175 mark. The DAX 40 or the Germany 40, as it's labeled on our platform, longer term trend is considered sideways. Now we have that price that has started trading whipsawing back and forth through that 200-day simple moving average. For me, when you see the price zigzagging back and forth through a moving average, it indicates to me that that trend is sideways. And it's obviously relative to the moving average that you're using. Using a 200-day simple moving average is also pointing sideways, suggesting that we're not really quite confirmed in a longer-term downtrend right now. We do have a bit of a bullish candlestick here, a bit of a hammer type formation, not today's session, but the previous session, off that 14,970 level. So for conviction for a long trade, I'd like to see today's candle just supporting yesterday's move. So we had an intraday reversal, seeing some confirmation with a higher close. So seeing this candle at least go and close in green, close in positive territory, in which case target to move up to about 15,465 and looking at having a stop loss on a close below that 14,970 mark. If it doesn't close, we'll be watching to see how it handles this level. I think if we do break below that level instead and close below that, then where to put your stop loss might be a bit subjective, maybe a bit of a 1 or 2 day high, and the next downside level there for 14,660 odd. Now the FTSE 100 has been in a range trading environment for quite some time, and that has how we've been trading it. So sideways market environment, we're looking at trading between the levels. We're looking for breakouts of levels or reversals of levels. That has been working out relatively well on the index right now. And what has happened is we've had a strong retrace breakdown from that 7,700 level. We've come crashing through that 7,560 level, and we are now testing 7,410. Now, in the sideways environment, I do give a bit more credence to oversold and overbought on either side because, well, these are range-bound indicators and they're best applied to a range-bound price environment, which is what we do have on that FTSE 100. Now, how looking at this, a bullish reversal of 7,410 would look like, to me, a strong close on today's candle, which is showing a bit of indecision right now. You want to see that candle green, you want to see it close above the halfway mark of that preceding candle. It's just going to show that the price, which has been falling, is now just ticking back and actually finding support off that level. In that situation, target back up to 7,560, and we'll see how it handles that level. And you could look at maybe having a close below that 7,410 as a stop loss indication. Now, the other scenario is that you don't get that bullish reversal. You don't see a positive close there. Instead, you see a close below that level. Well, that would, for me, constitute a downside break of that. And then we start targeting a short, possible short trade down to about 7,200. Might be a bit sort of aggressive. If you're a bit more conservative, maybe sitting about 7,265 odd and targeting a move there in the event of a close breaking of support. Then I'd consider having a stop loss either below a 1 day high, 2 day high, or maybe in the midpoint between the 7,410 and that 7,560 mark. But still, range bound trading environment for the FTSE 100. We're looking to trade off the levels, and we're seeing how that FTSE handles the 7,410 level right now. And again, just the price is whipsawing back and forth through that 200-day simple moving average, adding credence to that longer term view that we are non-directional and we adopt a range trading and short-term breakout approach on that index. Moving over to some commodities. Starting off with Brent crude oil. Now we are seeing an aggressive retrace on Brent crude. We did see those inventory levels much higher than expected. And it's also despite recent extensions to output curves from OPEC+. So it is correcting. The movement lower in oil prices does help with inflation expectations. We have seen higher energy prices and that, feeling some concerns in that. So I think from a personal level, sort of economic level, not too bad seeing oil coming back down. We have said that this longer term trend is up, and the short to medium term, we are seeing a correction of that longer term trend. And as we see those prices breaking these levels quite aggressively, for me, next level of support there sits somewhere about 81.60. If you want to be a little bit more conservative, 82.55 on crude. And for me, I'd be looking for the price just to stop falling, give it a little tick back, candlestick back and somewhere closer to one of these levels there to look for long entry again. I think that sort of that longer term uptrend is really starting to be pressured right now, and we are seeing an aggressive short term pullback, which is a strong inverse relationship with the US dollar. These little candles here with no bodies show you some indecision at current levels. We have had aggressive sell-off. We are still considering this to be a longer term range bound price environment or a sideways price environment, although the short term momentum has been down. We are looking oversold. We don't have that stochastic laboring in oversold territory like we saw in some of the other charts. So bulls will want to see just a strong close, just to see that price is starting to move back up. So we're going to see a sort of a strong green-bodied candle off this 1,810 level. If you are a bull and looking for long entry and targeting move back up to initially about 1,865. We don't have that right now, but if we did get that, we look at having a stop loss either below the low of these three candles here or below that 1,810 mark. Now, in the event that this does not manifest and we start seeing a bit of weakness, our next level is on the way down. We start looking at 1,785. Now, that's not a target until we see a break below that, close below that 1,810. I'm not sure from a short perspective that we want to chase that too much lower, just because of the close proximity of that next level of support. And obviously it provides a bit of a challenge as to where to put your stop loss and maybe an unfavorable risk relative to reward assumption for that trade. Now, platinum, been disappointing this year to many, and we've talked about this, and it's been working quite well for a bit, trading between the levels as we're looking in a sort of short to or a longer term range bound price environment. But what we do actually have right now is that price starting to break support and suggesting that, well, maybe we are starting to move into a longer term downtrend for platinum, which, despite what we might think fundamentally, we trade what we see, not always what we think. So we've had a break below 875. If traders who are short might want to have a stop loss above that 875 level. I think the next level of support there is a downside target sitting at about 840, 845, somewhere between 845 and 850 on platinum. All right, that's all the charts from me. I'm Sean Murison, Senior Market Analyst at IG South Africa, and thanks for watching.